What is up, guys? Welcome back to another episode of Lucid Daily. And today we obviously have some fairly large news that we're going to talk about. It's kind of the elephant in the room. We'll go ahead and go over Lucid stock price first. We'll talk about exactly what happened today. We'll go over the broader EV market and what's going on. And then we will go ahead and go over this $8 billion raise that Lucid just announced this evening. So let's go ahead and dive into everything, what it means for investors and exactly what it means for you and I going forward. Let's get started. So first off, today, you did have Lucid down 0.43% and then down substantially in the after hours, down 2.91%. Obviously, like I said, this does have substantial. This is because of the S3 filing that came out this afternoon with Lucid raising an additional $8 billion. And as you can tell, their market cap is $2.27 billion. So they're raising almost 33% more money than their market cap, like additional money. Not quite that math, not exact, but ballpark what I mean. So it is interesting to see that. So Tesla was down 1% during they were down 1% during the day today. They're up 0.3% in the after hours. And then Rivian was slightly up all day and slightly up in the after hours. So I do really want to do a deep dive into Rivian with you guys, but I'll probably do that on my main channel. I just need to find the time to do it. But with that out of the way, let's go ahead and dive into this S3, what it means, and let's just understand it, because there was a fair amount of miscommunication going around the Twitter community today, the Lucid community today, with exactly what this means, if it's good, if it's bad. Let's just get into it. So let me go ahead and pull it up here. I have it right here. Awesome. So here is the S3. You get, if you go search Lucid and like sec.gov, you get this thing, and it's like, oh, that doesn't look boring. And then you get like the meat of the document, which is right here. So Lucid starts off. You can see that they're going to start off and by saying, we're not going to go through this whole document. Trust me, I've already gone through it twice, and I don't want to go through it any more than we need to. So $8 billion of common stock, preferred stock, depository shares, debt securities, warrants, purchase contracts, units. And these are all offered obviously by the company. So let's go ahead and dive into what this is. Lucid may from time to time offer and sell common stock, preferred stock, depository shares, the shares that we just listed, up to $8 billion. And they may issue up to 44.3 billion shares of Class A common stock, which in layman terms is basically dilution. I'm learning more and more about dilution and buybacks and things like that. So forgive me if I'm not perfect, but from what I understand, the issuance of Class A common shares is quite commonly known as dilution. And this is not coming to a surprise to us. We're going to dive into the first section of this. So this is what's called a shelf offering. Now, what a shelf offering is it gives you 3 years to raise $8 billion. Now, the only struggle to this is, well, there's some pros and cons to this. The pros is Lucid gets $8 billion. I'm writing left-handed. Let me write right-handed for us. The pros, let me just Control Z. There we go. The pro is Lucid gets $8 billion. Yay. We can build supply lines, like assembly lines. We can build out Project Gravity. We're going to do Project Gravity. We can build new factories somewhere, maybe with East Coast, another continent, Saudi Arabia. I don't know. We can continue to R&D. I hope we're not spending that much, because I feel like we have been spending a lot on R&D. But $8 billion keeps Lucid alive. And guys, this should not come as a surprise to anybody, because Lucid has clearly shared that they will have to raise money relatively soon. Some people were expecting the end of last year. However, Lucid felt the need to do this. Now, what's nice about a shelf offering is, like I said, it gives you 3 years to raise $8 billion. Now, something really interesting is you have to wait 12 months after your IPO to be able to do this. So from what I understand, Lucid became eligible for an S3 document August 1st. So they obviously took almost a month to file it, which isn't the end of the world. In the grand scheme of things, it doesn't really matter the time frame, but it's just interesting to know that. So now what the biggest thing is, what the biggest caveat or the biggest downside will be to us investors in the short term within the next 36 months is that anytime Lucid has, let's go ahead and zoom in right here. Anytime Lucid has a little run up in price, we don't want that. Let's do, anytime Lucid has like a run up in price, we should expect another form or another filing to say, hey, we are going to be raising $500 million, $250 million, $1 billion. Either way, this is going to happen for $8 billion, where they say, oh, we had a nice run up in the stock, more money. So maybe we do $1 billion here, and we're going to do $2 billion here. Now we're at $3 billion. So we're only halfway there raised. So they're going to do this for the next 3 years. This is going to be exhausting for an investor because every time the price goes up, Lucid's going to sell. And what's that going to do? Lucid's going to raise money. What's that going to do? Is it's going to cause a drop in the stock price, obviously, from time to time. But what is nice is it's not going to come all at once. So the stock price isn't going to fall 30 or 40% overnight. But what they are going to do is it's more than just common stock. So here you have it. There is common stock, which will result in dilution, but they also have different types of shares. Now, this is where I'm not as educated, so that's where I would say maybe do some homework. Let me know down in the comments. But these are not as dilutive as necessarily straight common shares are. So they aren't just doing a straight common share offering, which is somewhat kind to investors, but either way, we will experience at least 44.3 billion shares worth of Class A common stock. Let's do that math. What is Lucid share price right now? I believe they were at $16. Let me see. Really fast. They were at, Lucid was at, 16.17. So let's do that math. So 44 million times 16.17. 44 million. Look, I'll turn the iPhone sideways. 44 million. Well, let's do that a little even. 44 million times $16 a share. Whoops. Dang it. I got to redo it. All right. 44 million. Bear with me. Times $16 a share. That's less than $1 billion that they have to raise from common shares, which is actually fairly nice for investors. Tomorrow, my commitment to you guys is I'm going to research how dilutive these are. So this is what I'm going to work on tomorrow. We obviously do know common shares are dilutive. So let's do that math. What's 1 divided by 8 really quick? So like 12% is only about 12% of that $8 billion will be heavily dilutive, like 1-to-1. I will do the research on this and see if those do all end up being $8 billion of just straight dilution, which wouldn't be super fun. But what's going to really stink is every time the market rallies, that happens. Now, what that could mean is for our other investments, the second half of 2022 could be relatively bullish. Although even though this is 3 years, we'll see when they raise money. But do expect that when Lucid rallies 10, 15, 20, 25%, that Lucid will raise more money. So that was one part that I had highlighted. Obviously, you can go through here. They have a lot of normal SEC disclaimers that they have to state. This is going to be from time to time. And each time we sell, they say, right, oh, whoops, I'm not sharing my screen. So let me go ahead and share with you guys this before we move on. So we know common stock is easily dilutive. These types of shares, I will do my research tomorrow and see if those are equally dilutive. Okay. So let's move on. Like I said, this is mainly filled with normal disclaimers. The other thing that I want to highlight for you guys was this part right here. It says, each time we sell securities, we will provide a prospectus supplement that will contain specific information about the terms of that offering. So each time they raise money, we'll expect a form like this with what kind of shares that was used to raise, how much money they raised, how much stuff like that. Now, what I do hope that we get is, okay, let me add a little bit of clarity. So the S1 right here, I'm just going to circle it. They asked like the S1, and there was miscommunication on Twitter. The S1 is usually used for an IPO. It's the first time you offer shares. And S3 is a shortened version of that, which is used to raise capital. And it even says right here, with greater flexibility to raise capital. I did additional research outside of this document to understand it. So from time to time, they may issue, offer, sell any combination of securities described in this agreement in one or more offerings to aggregate or offering amount up to $8 billion. So there we see it again. I don't think I have anything else highlighted. That was the meat and potatoes of this. There was one thing that I read, like I said, I read this twice. There was one thing that I wanted to share with you guys, but I couldn't find it again. But that is basically everything you should understand about, not everything, but majority of what you should understand. Now, what does this mean for investors? What this means is it's going to really suck for the next 3 years, because anytime Lucid has a substantial run up in price, they're going to raise money. I don't know how impactful that will be on the stock. We're going to see, because I haven't ever been a part of a shelf offering like this before, where they can kind of raise money over a period of 3 years. So whenever the the SEC, whenever they file with the SEC, we'll do the same kind of thing. We'll go over it and see if there's anything we should be aware of, anything that we should go for. The other thing is, guys, we have this should not be a surprise for Lucid investors, is because we've known this since the Q1 of last year, where they said that they were going to have to raise money. They were going to have runway from the end of 2023. So obviously we were going to expect to raise some money. $8 billion is a fair amount, but don't worry about it too much. This is what's going to be interesting, is how they use the money. That's probably one of the questions I would use on the earnings calls. Like, if I could ask a question, no more questions about, are we going to have partner with Apple? Like, they're not going to say that on an earnings call. Let's ask questions like, hey, you recently filed a Form S-3 to raise $8 billion over the next 3 years. What do you plan to do with that money? Fairly intelligent question, in my opinion. So all of us, next time we have an investor, next time we have an earnings call, let's upvote that question. And I'd love to hear their answer, because it all depends. If it's to develop a race car, it's not the best thing for the company. But if it's to say, like, hey, we're ramping the Air Pure, we want to hit 150,000 units next year, like, booyah, like, that's what we want, like, that's what we need. So keep that in mind. Let's see what they do with the money. It's a little too quick to kind of just say, like, oh, like, I'm done with this, like, they're raising too much money. Like, no, like, we've known this. And that's why, like, the stock hasn't fallen like 8-10%. It's because the stock market was expecting this. Obviously, it still is a little bit of a dagger, which is why the stock was down 3%. But I wouldn't worry about it too much. I hope you guys have a fantastic rest of your night. If you have not yet, consider subscribing, and we'll be back here tomorrow, and we'll see you next time. Thanks for watching. Bye-bye.